The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman here on this Monday, the 30th of September, last day of the month. And let's go straight to the numbers. And the numbers are really fascinating right now. Look at this. This is high-grade copper. What a move. 4.79 overnight. Leg D. I had this drawn out right here. Look. I had used this particular bar right there as a plumb line. Midpoint for the number of bars on the left should equal the number of bars on the right from that level, going back to where it was. It did that, it went a little higher, and now it's come down very sharply. So you've got copper pulling back. As far as I can tell, the technicals are still very strong. So it's price movement. That price movement will affect the technicals if it continues. But right now, it's just saying that usually at a peak D in the Chapman wave methodology, that's where other things can happen. Be prepared for it. That's what it says. So it's only a leg B in the weekly chart. And it's actually a gray B because the stochastic hasn't even come close to the 80% level. And the monthly chart did make a peak D pulling back. So this has been a very nice bounce. Treat it as a bounce just for the moment. All right, let's get back to our story. And we've got the story that says the Dow down 117, came back. It was over 200 down earlier on. The question for me now is a technical one. Is this a peak F, a leg F going to 42,628 all-time high? If there's no new high today, does that become a peak F, or is that really an alternate count? You've got an Chapman wave instant restart right here. It almost took it out, but it didn't. Now, I don't like this when I see that the diamonds did take it out. So this is a question now of, it isn't just purely technical. You have to do some artistic rearranging of your thoughts because there isn't clarification. But when you take this amount of time and this big pullback from that peak D, this just says, watch the technicals closely. So the 9 is over the 14. That's good. The MACD is good. The relative strength has started to pull back. It's a little weaker, but that's still pretty good. Stochastics flat at 89%. That's what you want to see in a bull phase, and we've been long for long. We've been long since the bottom. So we're looking at this and saying, okay, you tell us because we're not getting ahead of the game. But we did buy some insurance, and that's so fine. Insurance was in the S&P only because it started to lag the Dow. There's nothing wrong. It's gone to a G/C in the Chapman wave methodology. That's the technique that I use. But look, the price is over the 9. 9's over the 14. The MACD is good. The stochastic is, so the relative strength, the gray line here, is steady. It's not breaking out, but it's not breaking down. Stochastic's at 93%, and that's really positive. And the on-balance volume is the clue to me that says, you see this jagged little seesaw modulation that you can tell from about the 19th of August, and then the Dow had that double top in the 5650. Sorry, the S&P made a 5651 double top, and then it pulled back quite sharply. Well, we're looking at the same zigging and zagging right here, just suggesting that the volume aspect is determining that the follow-through strength that you would see on a big, strong blue line right here, that start to wane. And that just says be a little careful because there is some toppiness. If you look at the weekly chart, that's still pretty darn good. And I'm not going to argue with that. It's good in the S&P, even in the Dow. Look at this. The Dow broke out in a leg D in the inside track repellent zone. It's right there now. It's working very hard. We'll see what happens by Wednesday of this week. Give it a couple of days. Let's go to the QQQ, and this is a little different because the Q is pulling back 67 cents at 486 is the index 100. Let me just see if I've updated the index 100.x. No, I haven't updated that. So the weekly chart is under the 20,690. I can go back to the QQQ because they look very similar. Yep, they look very similar. So the 503.32 high in Invesco QQ Trust Series is the NDX 100 trading vehicle. Hit 503.32, slumped down to the 420s, and has come back pretty strongly in the price with a 9-period moving average. But wait a minute, look at the weekly chart of the MACD. It's still negative. It hasn't crossed positive. Look at the stochastic, only at 68%. This is the weekly chart. So the daily chart is still very strong. It did make a peak D. Now, my rule of thumb is that if there is a peak D under the previous high, I'm always very disappointed. I just say, I want to see a breakout that takes like leg C should go above 503.52. That'll be really powerful. This just says, strength is beginning to wane. So with that said, I haven't done anything yet with the QQQ. Just watching it closely. I mean, it has stocks. It has Amazon right now. Amazon made a peak F doji candle in the daily chart, way underneath the previous peak, all-time high. Oh, did I not put that in? Yes, I did. 201.20 on the 8th of July. Just pulling back a little bit. Tesla, let's see what Tesla is today. Tesla's, there it is, making its leg D. So I've got all these Ds, couple of E's, couple of failures under the previous highs. And the way I'm looking at it, there's a lot that says running out of upside energy. It's becoming very selective. Just be a little careful here. Let's go to IWM. So we took a little off our long position from almost the low of August. Let me have some tea. Yeah, this voice is really worrying me a little bit. It gets scratchy. Never used to get like that after talking just for a short while. I used to do 3 continuous days of 8-hour sessions. Well, I think I'm paying the penalty for that. 228.63 on the 31st of July in the IWM. Drops sharply to the 196.60 level. Almost immediately we go along the 202 area. Taking a little bit, just took a little bit off today. And only because it's money management. Made a peak D under the previous high. Just says, it's just, some of these sectors are starting to work a little bit harder than they should. Look, this is very interesting. Look, the AIQ. This is the Global X Artificial Intelligence ETF. Screams an all-time high 3 days ago. We've been long for quite some time. There it is, at 37.09, just down 14 cents. Weekly chart, leg B. This looks fabulous. And that's fascinating because one of the AI stocks, you'd have to say Microsoft really is part of that, hasn't been going anywhere. It's just stuck. 426.31, down $1.71. Peak E in the monthly chart, peak E in the weekly chart. Hasn't broken down, but hasn't really broken up. So this is a very selective move that we're seeing right now. I'll be back in a moment. The Dow is down 110. It's come back quite nicely. S&P's down 8.5. Very selective moves over the last few days. Be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
We're back, and we wanted to look at a couple of things that are quite important at this particular stage. Is the SMHs. The SMHs, that's the semiconductor market vector semiconductor ETF. Down 375 at 243.96. Now, what's really important about this, you've got a peak C, but it's way underneath the previous high of 283.07. I just need to type that in here. 283.07. Let's just make it 7. I think it was 7. Make it a 714.24. There we are. Okay, and within this context, what I would like to say is that it seems to me that the semiconductors are suggesting strongly that the high that was made back in July for them is a more serious high, in the sense that it's taken quite a while to get back to halfway. But it also says that there's some residual strength, but there's a lot of resistance, and that resistance is basically saying, go to NVIDIA, for example. NVIDIA right now is down $1.90 at 119.51. The pattern that I've drawn in here suggests very strongly that it couldn't go above the previous peak D that was made in August at about the 130 area. Instead, it went to the 128, and then it pulled back, and it's at 119. It's not failing, but it's just suggesting very strongly that there's kind of a wait-and-see attitude in the semiconductor area. Rather than leading, they are stalling. Not failing, but stalling. And that makes a very big difference. And that's just suggesting that, now, let's just be as concrete as we can. Within the context of the election early November, you would anticipate that this is the period that should be, market-wise, should be fraught with uncertainty. The market is not suggesting that. Semis are suggesting that, but if you look at here we go again, the Dow, all-time high on Friday. Today, a little bit of a pullback. S&P, all-time high recently. Hasn't gotten to that level yet, but it's still holding pretty darn well. That was Thursday, Friday, Monday. That was on Thursday. So, and it's all very selective. And within each group, you've got, for instance, the Dow, you had Amgen take a huge dive recently, last week. Just plunged. I mean, tootling along in the 337s. Next thing is down in the 313 area. I mean, that's a dive. If you go to Caterpillar is almost at all-time highs. Now that is, the one is, let's call it the biotech, the area of medical area. And then the other area, you've got the infrastructure. And if you look at PAVE, which is this is the Global X U.S. Infrastructure and Development ETF, all-time high on Friday, pulling back a little bit. This is an unusual market in the sense that the normality, the things that we would normally be looking at unfolding are really mixed. If you look at Deere, so Caterpillar, of course, this is really important because it is part of the infrastructure, it's part of the very large equipment that's needed. So Deere is tractors, farm equipment. So that was failing, and now it's started to come back strongly. And if you're looking at, let me just do this for a second here. So let's call this E, F, G/C in the daily chart. Very strong leg B in the weekly chart. So this goes to the grains, and the grains for a while were just looking terrible. But if you look at the DBA, which is the DB Agricultural Fund, that made an all-time high on Friday. Little Chapman wave, red Chapman wave reversal candle, a Roman candle, pulling back a little bit today, down 51 cents. Only I'm calling this a leg C in the weekly chart, and a leg F could be an alternate count in the monthly chart. And that's just suggesting that the grains, let's go to this real quickly. Look, here's the grains. Off the lows, they've come back very nicely. They look terrible monthly. I mean, this looks horrible. The wheat. Look at this. The soybeans. Soybeans are very nice rally over the last month, and it's trading from the 950 area into the 1,063 today. Leg B at the 200-period moving average in the weekly chart. Pretty good. Look at the corn. Corn, nice weekly chart, and nice daily chart. Weekly chart's okay. Monthly chart for all of them is just terrible. So things are going on that are, if I was just looking at the grains right now, I would say I don't see why Deere should be going to close to all-time highs. Well, 416 right now. All-time high is 450, round number high back in July. So it's still doing well. It's underneath that previous high. Isn't that interesting, though? This is all within the sectors. So we were looking at crude oil just the other day. I said crude oil just seems to be kind of stuck in the lower range. It's not like gold. Gold has this whole Middle East aspect. Usually crude oil is right there, but it hasn't been for quite some time. So crude oil is stalling. If you look at ExxonMobil, no, it's not absolutely directly related to crude oil. It can move on its own. Multinational oil company, holding in a rectangle formation in the monthly chart and in the weekly chart. Daily chart's improving a little bit. It's at 116.56 because the technicals are improving. They're not great, but they're improving. So I'm just saying that you've got a really mixed market right now. And that's the reason why I thought it was really appropriate today for us to take a little bit off all our positions that were acting so well. And some of them we've had for quite a while, so it's appropriate to be taking a little bit off. Doesn't mean to say, oh my God, get out of it. No, it says just take a little bit off. We do have one. I want you to talk about it not because of what it's doing today, but what it did for a little while. I'd spoken about this as instant restart, and then I said, no, that's kind of negated when there's a very strong, within 3 sessions after D, goes to leg E. And you can think of it as an E/B alternate count. But if it has a very strong move to the upside, you've got to be careful, because what happens is that has independently moved to the upside, and the technicals, not the 914, but the MACD, the stochastic on-balance volume, they could be failing, and that says you get a much sharper pullback from the E, and that kind of, in a way, negates that instant restart. Usually they're pretty sharp moves, each peak going to the upside. So I'm just looking at this and I'm saying it's had a fabulous move. Solventum Corporation, healthcare spin-off from Triple M. I should mention we are long. We've been long since back in July and August. So the point is, I wanted to show the instant restart because it's an educational thing, and people like to, people who study the Chapman Wave methodology, like to be moving along with whatever the criteria is at the moment. What am I using? So it went from the 57s, our entry went to 73.40, and it's pulled back. We're taking little bits off. I should just clarify that we did add a little bit on Friday and today for those who missed the Friday entry. And it's up a little bit. It's up 50 cents at 68.07. I'll be right back. Basil Chapman, Tiger Ignitions Hour. Dow's only down 90 right now, and S&P's down 10.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Hi, folks. Just wanted to show you this. There was a peak E at 10 o'clock last night, just between 10 and 11 in the... was that last night? No, that wasn't last night, 9:29. Oh, that was, I think it was Friday, yeah. And then it came down. And now what we're looking at is the 200-period moving average in the 10-minute E-mini chart. That is 57.92 will be the resistance if there's a bounce from here. And we did a lot of testing of the 57.80 level, and we're trying to bounce off it, and that's going to be key because it closed under any bar on the 10-minute chart that closes under 57, I'd say 75 today. That'll be a big negative. So in a trading band, although it's end of the month, beginning of the month, it's where you usually find buyers come in. End of the month, money comes into funds and they have to put it to work. All right, so with that said, let me run this down. Gold. Gold right now is down 14 at 26.53. We took a little bit off our gold stock. It's done quite nicely. Not great, but it's done nicely. And I just think gold is getting a little tired right now. And as I say, I think it's at 26.53. I wouldn't be surprised if 26.33 is going to be the big test to see if it goes lower, or if that's going to be a bounce-off area. But it's a leg D in the weekly chart finally, and a new high above. This is a continuous contract. A high above 27.08. Let's call it 09. 27.09 would be quite important. I just think there's a peak C, a leg C in the monthly chart. Says it should be going higher, but you can have a little bit of a breather right now. Silver's a little different. Silver's been dropping since it made its high at 33, around about 33.02 3 sessions ago. It's had quite a bit of a pullback to 31.32, just percentage-wise, and it got repelled at the Chapman Wave Inside Track repellent dashed green repellent line right there. So this has got 1 week to go to make, let me move it across this way. So the plumb line right now is right there. That's the plumb line. In other words, from the high that was made in the weekly chart of the 24th of May at 33.52, the number of bars to the low that was made the week of the 9th of August to an equal amount on the upside takes you to right there, takes you to the week of October the 18th. October the 18th, and it says there's a good chance, if everything remains strong, that by that particular date, we should be getting, let me just move this across, I'm a little fussy about that. There's your inside track, this is your inside, right there, wedge, green dash target resistance line. That just says pullback, but if everything continues to be, look, the MACD did cross positive in the weekly. Stochastic's still under 72. That's unfortunate. It needs to be over 80, but that would be the line that we're looking at. And we're looking at the 18th of October that it tries to hit the 33.52 high that was made back in April or May. And 1 penny above that goes to a leg D in the monthly chart, and that's what I'm anticipating in the next, I'd say, month or two. All right? So with that said, let's go to high-grade copper. We were looking at that earlier. High-grade copper is down 0.07. It's come back a little bit from the daily low, but wow, it was up at 4.79 in the continuous contract. Low was 4.49, and here it is at 4.52. So that's going to be very, very important, because if copper starts to pull back, and I showed this over the weekend to my subscribers when I did my hour-long overview video looking at markets and looking at our positions. I never updated this. This is a timber and forestry ETF. This is a brand new, I think it's a brand new. Well, let's call it a brand new. A, right there. And this could be a continuation pattern. So just be careful, F/B, just because we need to see where this closes on the week. And what have we got? We've got in the daily chart, this is wood, the iShares Global Timber and Forest ETF. And this is really important. Why? because I like to see copper and the timber and forestry ETF global. These are international things. This tells us about markets around the world. So this is still very strong. It's up 26 cents at 86.37, and it's broken out of the down channel. Remember, this is the falling axe formation, where you make lower highs and then much lower lows, then all of a sudden tries to form a V or a cup-shaped formation to go back to the previous peaks. And it's doing that right now, breaking out of this trend line resistance. So that is a good sign. Okay, now one thing I wanted to do is, within the context of the iShares Timber and Forestry ETF and the copper, I want to look at the volatility index, the VIX index. So the VIX index right now is up a little bit, up 7 cents to 17.03. And what I've been pointing out is this 200-period exponential moving average, which has been like a little homing pigeon. It keeps coming back to this level over and over, no matter how high it goes. That's going to be important, because if this week, around about Thursday, Wednesday afternoon to Thursday afternoon, if the volatility index has even just one pop to the 19s, that's going to suggest that it's starting to become active and fund managers are starting to buy insurance. That's what we need to see. At this particular point, it's just it's within a very tiny trading range. So that's right now, I'm just saying, showing little sparks of life, but nothing that's sustainable at this particular point. Next question I wanted to look at was, I wrote it, the IYT. Hey, isn't this fascinating? IYT, I've got this as a brand new buy signal, maybe a buy mode by the end of the day. Now that's interesting. Why would I have that when I'm looking at some kind of digestive phase? Because the rolling corrections, both on the upside and the downside. How do you get a correction on the downside? Well, sometimes what happens is there's a pullback and you keep testing, like the dollar. Look, the dollar, here we go, the dollar, DXY, that to me is trying to form some kind of a base, a bounce base. So if I'm looking at it fresh, it's gone. That was a D. That's a gray A. This is an E/B. And this is a C. And this is a lowercase d. So we're very close to the dollar, at least attempting to have some kind of a bounce. I'll be back. Dow's improved a lot, down minus 54. S&P's down 4. Basil Chapman, Tiger Technicians out.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly Gold Report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
The stock market is a delicate interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust. The stock market is a delicate interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Go to the questions that I had over the weekend. So this is GDX. Here's the GDX. GDX is down 70 cents to 39.66 is the market vectors gold miners ETF. Leg D in the monthly chart. We're looking at monthly candles now. Now, I've got this as a peak C. I've really pondered this a lot. Everything about this peak C right here suggests very much that, like gold, going to a D, with that turnaround right there from, was that May? I think it was May the 24th, the week of the 24th. Here, the GDX, May the 24th was a peak E. But I'm looking at this, I've been staring at this and saying, this is not an instant restart because it's not 3 bars, it's four bars and it broke to the upside. But everything about this leg C over the weekend when I was looking at it suggested to me that this really looks like a D. So every once in a while I have to do some kind of evaluation of the Chapman methodology and say, well, you know, the objective here is to be as accurate as you can. That's all there is. So there's nothing I can do about that right now. But the daily chart with those 2 doji candles with the Chapman silent doji, another one of those myriad techniques that I've developed. The silent little doji, this little one right here on the 25th of July, 25th of September, sorry, at 41.69. With the very next day, 41.95, an even slightly larger doji candle, open and closes at the same price. Big red candle on Friday, gap down, red candle today. The 9 is still over the 14. MACD hasn't yet crossed negative. Relative strength has gone weak. Stochastic still at 85%. So all I can say is there's a lot of evidence that's suggesting this is going to turn into an F. I'm doing the same thing as if this was the Dow, with an alternate count, maybe an F/B, even after the instant restart. But just to be a little bit aggressive, I'd say. I'm calling it 42,628. Look, it's almost the same pattern. that pullback there in the Dow as a possible F, but technically I should be as faithful to my work as I can, and I'll call that F/B because there is still the chance that it makes an alternate count with a slightly higher high above 42,628 this week. Can't rule it out. All right, so let's go back to what I was looking at before. So I said I'd look at Toll Brothers. Toll Brothers holding well, made an all-time high. Amazing, huh? All-time high on Friday in the 150s. Today, pulled back 153.73, down $1.52. Yeah, I don't really have a choice. This is a peak scene. I should make a leg D in the weekly chart. Leg F, I'm calling it in the monthly chart. So here we go. Some questions came about. So can I look at Tesla? Yeah, Tesla had a really good move. So many of these stocks are going to D's and E's. I'm just looking at this and saying, everything that I look at says we don't have to be breaking down, but I'm thinking the upside might be a little limited right in the next couple of days, and then we'll see what happens. So this is a leg D down 290 at 257.61. Fabulous move. And I remember we were talking about this. We had our caller, Ilko was looking at this and said, what are we looking at? And it broke out very nicely. This was way back. I think it was mid-August. I think it was in the 205 or 207 area. And here is 257. Really was a 20% move. So this monthly chart really needs, and I would say in October, it needs to get above the high that was made right here of 271. Oh, I didn't realize 271. Was that a round number high? Oh, I forgot to type it in. Yes, 271 on the week of the 12th of July. 271 round number high. Here we go. 271 round number high. Very good. And so to get to 271.01 to start at leg C to start at leg B. No, it would be. There's your other. Oh, you've got to count every low from the bottom. That's an A and that's a B, and that'll become a C at 271.01. I'd like to see it in October. That's going to be very important. All right, now a couple of things that are really important as well. GM, General Motors. So the question came in last week. I did discuss it briefly, and I just said, I'm calling this a peak C, and it's really fantastic that 50.50 with a round number open on the 21st of July plummets down to the 39 level, and then rallies all the way back almost to 50.50, just misses it. And now I can call this a peak C1. This is the way peak C1 and C2 works for those of you who use this technique. Just underneath the previous high, then I put a plus sign in red to say, oops, that acts like a D, so just be a little careful. And here's General Motors trading now at 45.25 with a potential dreaded H, or it looks like an inverted V, or pyramid formation, at 45.25. If General Motors is coming, I'm going to give it a full week, a Monday week. If by then it's hit the 200-period moving average of 43.29, it might be a little different, but let's say 43.30 area, that's going to suggest a little bit of a timeout, but it's actually doing quite well when you think about the other automobile companies. Look at this, Ford stuck at about 10.56, just been in a low range trading band, nothing to see there. If you go to race, completely opposite area. This is the Ferrari. Ferrari goes to almost 500, misses it by a little bit. Round number there. It would have been nice to see that. Said it went to 498.23, and that was on the 3rd of September, pulling back sharply. A dreaded H pattern twice fails, and now it's going for the third one. Let's see what happens at 469. If it goes under this low right here in the next week. Now on the 18th of September, it did 456.52. That's going to be a negative. I've got this as a peak C in the monthly chart, in the weekly chart, leg E in the monthly. And it's really important because I'm looking at this to say in the upper end of the range, what's happening? Well, stalling, not breaking down, but stalling. In the middle range, GM is held well, not doing great, but it's really holding well. I wanted to just cover that briefly. And then TMO, Thermo Fisher, one of the great companies on the market, Thermo Fisher Scientific Inc. Medical, just in a trading band at 614. I'll be back in a moment. Dow's down 29. Not bad, huh? And S&P's down 2. Be right back.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry August 9th and 23rd for more live trading action. For this month only, use code LarryAug24 at checkout to save $50 off your first month as a subscriber to Live Trading Fridays for his live trading sessions, where you'll sit right beside him as he trades the market live. For this month only, enter code LarryAug24 and save $50 off your first month. For all the information and to reserve your spot today, visit the front page of TFNN.com.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Hi folks, we're back for the final segment before you go to Steve Rhodes. Let me just say that the FXI, which is the iShares China Large Cap ETF, capped up again in leg C. I suspect that there's probably going to be a leg D this week and then a peak D, and then China will have a little bit of a breather. It's had a fabulous move off the lows, 20.87, retested. That was in October 2022. Retested at the beginning of this year in January at 20.86, 1 penny lower, so it starts a brand new move. Peak A, leg B right now with 34.64 as the 200-period exponential moving average, big resistance that I think it should try for in the next month or so. In the meantime, what we're looking at is it's done very nicely right here. So let me just sum this up. I'm in the camp right now that says we've had a spectacular move. Our long positions, we've taken a little bit soft, especially with some that we haven't taken much off at all at this particular point. Today we did take some. What I am looking for is more digestive phase, maybe to put money back to work. But I'm just expecting that this week's going to be a little bit choppy. We've got buying coming in from the end of the month going to the beginning of the month. But, what are we going to have one of those, the thematic action for decades and decades has been discussed, and it only really does it work out. Sell on Rosh Hashanah and buy in Yom Kippur, something like that. That's coming up midweek. We'll see what happens. Meantime, back at the range, I do think there's a digestive phase. I would just put it this way. I think upside is a little bit limited right now, but the downside, you might start to see a little bit of falling through the cracks to make slightly lower lows. That's my position right now. If you look at the stochastic and if you look at the 914s, just as we go out, have a look at this. I don't have it. Have a look at this right here. Look how high the 914 is over the daily chart in the Dow. Look at the S&P. Same thing. Look at that right there. So it's just a work in progress. It says a little digestive phase coming up. I'll be back tomorrow.